Hello, welcome to this special International Credit Union Day NCUA broadcast on pathways to safe and affordable account access for consumers. I'm Ken Worthy, Financial Literacy and Outreach Program Officer with the NCUA's Office of Consumer Financial Protection. I will be your moderator for this broadcast. Before we begin, please follow along as I review the information on your screen for the best viewing experience. Please adjust the volume on your computer so that you can hear the webinar clearly. To increase the size of your slides, drag the bottom right corner of the presentation viewer. Please allow pop-ups from this site for it to function properly. Download the presentation by clicking on the PDF file under the Resource widget in your console. Use the Ask a Question feature on the left side of your console at any time in order to ask a question. We will address these questions at the end of the webinar. This webinar will be closed captioned and available for on-demand viewing on ncua.gov in approximately 3 weeks. As a quick reminder, the views and opinions expressed during this broadcast are those of the presenters and do not reflect the official views of, nor should be considered an endorsement by, the National Credit Union Administration's Board of Directors, its management, or staff. In just a moment, Office of Consumer Financial Protection Director Matthew Bolaris will provide some opening remarks. After the director, we will hear from the Consumer Financial Protection Bureau, also known as CFPB, who will provide an overview of the research available on account features that are helpful to serving consumers, especially the underserved. Then we will hear from two national organizations, the Cities for Financial Empowerment Fund and Inclusive. Both organizations will share the programs they operate to support credit union efforts to serve their members' financial well-being. We will also hear from their credit union partners, Inclusive's partner, Premier America Credit Union, and Cities for Financial Empowerment Fund's partner, River City Federal Credit Union. Both organizations will share how they implemented account features that serve the needs of their members and serve their members' financial well-being. Features include those that involve charging low or no fees, including no overdraft fees. The biographies of our expert panel are available on your console as well. You can click the arrow, drop-down arrow, to view more about the expertise of each of our panelists. So please take a look at that when you have a moment. After our panelists present, we will then open up the broadcast to your questions. And a reminder again, if you have a question at any time, please use the Ask a Question box on your console, and we'll get to them at the end of this broadcast. Now, I'm pleased to welcome Director Matthew Bolaris.
Thank you, Ken, and welcome to all of you for joining us this afternoon. On this particular day, International Credit Union Day, we join organizations across the world to recognize the global credit union movement. International Credit Union Day began back in 1948, and this year's theme is Building Financial Health for a Brighter Tomorrow, a fitting theme for our event this afternoon. Today, on the 73rd celebration, we all can reflect on the credit union movement's history, promote its achievements, and recognize the value credit unions have in strengthening the financial lives of individuals, families, and businesses across our nation for a brighter tomorrow. Under the Federal Credit Union Act, credit unions were organized for the very purpose of promoting thrift among its members and creating a source of credit for provident and productive purposes. While credit unions serve the needs of their members and promote financial education and financial inclusion within the communities they serve, the NCUA works to reinforce credit union efforts, raise consumer awareness, and increase access to credit union services. This year's global health crisis has been difficult for communities around the world. Yet despite this ongoing crisis, credit unions continue to assist members facing difficulties by extending loan payments, providing financial counseling, offering special relief programs, waiving fees, and improving access to financial services to the underserved. Different segments of the economy are recovering at different rates, and credit unions are tailoring relief options to the specific needs of their members. Each credit union's outreach efforts have been unique and inspiring, such as calling elderly members to check in with them, keeping members informed of COVID-19 related scams, providing curbside assistance for document signing, and supporting the communities around them with supplies and collaborative campaigns. Although all Americans have dealt with challenges due to the pandemic, not all Americans have fared similarly. Family income continues to vary dramatically by demographic characteristics, including race and ethnicity. This gap leaves many minorities at an economic disadvantage, and the lack of financial access, along with high-fee, high-cost financial services, contributes to the gap. In addition, unbanked and underbanked rates are higher among adults with lower income, adults with less education, and among minorities. In a recent survey conducted by the FDIC, the most cited reason for unbanked households not having a credit union or bank account is that many don't have enough money to meet minimum balance requirements. And over 500,000 households who once had a credit union or bank account are currently unbanked, primarily due to high or unpredictable fees. There are many things credit unions can do to help, such as increasing awareness of credit unions and their services, educating members and consumers more broadly on ways to avoid fees and overdrafts, and forming collaborations with community partners. These efforts can lead to a meaningful benefit, not only for members, but for potential members who are unbanked or underserved. And you'll hear some great ideas on this from our guest speakers joining us this afternoon. Before I move on to discuss how our team in the Office of Consumer Financial Protection can help, I wanted to reflect on how the commitment to consumer financial well-being comes from the very top of NCUA. Here on this slide, reflected in this quote from NCUA Chairman Todd Harper, who said, "At the heart of the cooperative credit union movement is a commitment to improving the financial well-being of every American, including those of modest means." Now I want to take a few minutes to briefly discuss the role of the Office of Consumer Financial Protection and the resources we make available to credit unions and consumers. In OCFP, we oversee the NCUA's financial education and outreach initiatives, including the Consumer Financial Protection website, mycreditunion.gov. We also staff the NCUA Consumer Assistance Center, which takes inquiries and other concerns from consumers and helps them work with their credit union to achieve financial success and resolve disputes. In addition to these core financial well-being functions, we protect consumers by enforcing and helping credit unions comply with federal consumer financial protection laws and regulations. Stopped. Here's a screenshot of mycreditunion.gov, the agency's financial education and consumer financial protection website I mentioned. Credit unions can use the information and learning tools on mycreditunion.gov to provide the members and communities they serve with helpful tips on federally insured savings, debt management, steps to buying a home, understanding credit reports and scores, and many other financial education topics. mycreditunion.gov is also available in Spanish at espanol.mycreditunion.gov. NCUA is also an active member through NCUA Chairman Todd Harper of the Financial Literacy and Education Commission, which is dedicated to addressing the financial literacy and financial inclusion issues in our nation. Our team in OCFP works closely with the U.S. Treasury Department, the CFPB, and other agencies to bring greater focus on financial inclusion as part of our collective federal efforts. So today, as credit unions reflect and celebrate their beginnings, it is also a good time to reflect on the founding principles of the cooperative credit union industry and identify additional ways credit unions can continue to uphold these principles in our rapidly evolving marketplace and economy. Unfortunately, the pandemic has further exposed and expanded financial inequities in our society, making many pre-pandemic financial concerns worse. However, credit union programs and initiatives, like the ones you'll hear about on this broadcast, are working to achieve the credit union mission by offering low and no fee, easy to understand transactional and savings accounts to benefit the communities they serve. The NCUA pledges to continue to work with credit union stakeholders through its advancing communities through credit, education, stability, and support, or access initiative to achieve financial inclusion and foster financial education efforts. So again, thank you so much for joining us this afternoon, and I look forward to hearing your questions and even sharing some of your own ideas for safe and affordable account access. Ken, I'll turn things back over to you.
Thank you, Director. Now we will welcome Dave Szymanski, Senior Policy Analyst in the Office of Community Affairs at the Consumer Financial Protection Bureau. If you have questions for Dave, please type them into the Ask a Question box on your console, and we will get to them at the end of the webinar. Dave, over to you.
Thanks, Ken, and thank you to all of you for allowing me to join you today for this discussion about overdraft. As you will see if you happen to read my bio, before I come into the CFPB, I helped to start a low-income community development credit union in Seattle, and I was the director of the nonprofit affiliate for that credit union for about 5 years. I've also been a proud member of credit union member for over 30 years, so I greatly appreciate the value that you all bring to your members and to the communities you serve. So like the NCUA, we have our standard disclosure, and basically it says this presentation is being made by me as a representative of the CFPB and does not constitute a legal interpretation, guidance, or advice of the Consumer Financial Protection Bureau. Any opinions or views stated are my own and may not represent the Bureau's views. And in this case, we are not referring to any third-party sites, but we always like to remind people that if and when we do in our presentations refer to other third-party organizations, they do not necessarily reflect the Bureau's endorsement of that third party or the products or services offered by that third party. So a little bit about our research on overdraft. As I think all of you know, overdrafts have the potential to be very costly for consumers. We're continuing to closely monitor developments in this area, and overdraft policies and practices vary across financial institutions, between and among credit unions, and certainly among banks as well. And overdraft is a complex ecosystem that includes funds availability, how holds on funds are treated, when transactions are posted, whether waivers are offered, and a variety of other factors that I'm sure you all are well aware of. So, our view is that more transparency from institutions will only help consumers make better decisions about the types of accounts they can select and effectively manage their accounts. And I know from personal experience, it's difficult to explain to consumers how overdraft works and when it's triggered and things like that. But, to the extent that you're able to, helping them to understand how overdraft works is really beneficial to the consumer. So a little bit more about what we found is that it's not just about accounts with banks or credit unions. Consumers have to be aware of fees associated with all types of financial products because they can cause surprises and interruptions in their financial lives. And certainly when you think about the past year and a half or more that we've been suffering through the pandemic and how consumers, especially people with limited resources, have been challenged in so many different ways, and then having financial challenges makes it, all the more acute for them. And so we're really aware of that. But we're also aware of the fact that this, it includes not just bank and credit union products, but fintech products and other products that directly or indirectly offer financial services to consumers. And the Bureau has found that opted-in accounts have 7 times as many overdraft fees as accounts that are not opted in. And the median overdraft, at least according to our research, and NSF fees, non-sufficient fund fees, is around $34, and these fees have generated an estimated $15 billion in annual fee revenue for financial institutions in recent years. So we suggest several steps that consumers can take to reduce or eliminate overdraft, and I'm sure you're aware of these, but just these are the things that we like to suggest to consumers. First of all, don't opt in. People can avoid paying overdraft fees when they're using their debit card for purchases and at ATMs by not opting in, or by opting out if you're currently opted in. And I think a lot of people are not aware that they have that option if they're already opted in. Second is to link the checking account to a savings account. If someone overdraws their checking account, money will be taken from their linked savings account to cover the difference rather than experiencing an overdraft. Third is to track balances carefully. In many instances, and I'm guessing that many of you on this call may offer low balance emails or text alerts offered by your financial institution. And we know, especially for people with limited incomes and low or fluctuating balances, that day to day they're often not fully aware of what their current balance is. And also, they may also be confused about, like, for example, when the next check clears and how that affects their balance at the time that they're writing a check or making an expense on their, out of their account. So, helping people to track their balances carefully reduces the potential for overdraft. And then finally, switch to a checking or prepaid account that does not authorize overdraft. But with the caution that some accounts do not authorize overdraft, but still charge not sufficient fund fees, NSF fees for return checks or electronic ACH payments. And finally, we've created a number of tools. Some of you may be aware of, included in our Your Money, Your Goals toolkit, to help consumers and service providers working with consumers to make choices about the types of financial products that they may want to use. So the first tool, and I think you'll receive this slide deck and the recording, so there'll be links in there, but the first tool is finding financial products and services that meet a person's needs. And with this tool, we suggest that people first determine what their financial goal is before choosing a product or products. Sometimes people just want a transaction account to pay bills. Others may want to have a separate place to save for unexpected expenses or for longer-term goals. In the case of credit unions, people open a share account when they when they first build that relationship with a credit union, and to become a member. But then they usually will open a checking account for other transactions, and they may choose other products as well. So for some folks, the other things to consider, for some folks, online access is the most important to pay their bills and to transact their business, to move money from account to account. While for others, having access to brick and mortar locations is as essential. So the checklist that provided in this tool walks a user through all these options and considerations and provides basic information on whether these products are offered, or where and whether they're offered. And then the second tool that I'll flag is opening a checking or savings account, and it's basically another checklist. That this tool provides basic information on steps a consumer needs to take and what they need to do to prepare for opening an account, including the types of ID they need to meet the KYC requirements, and most importantly, what questions to ask the financial institution before opening. Several of those questions are related to protecting themselves against overdraft. So with that, I want to thank you again for inviting me today, and I look forward to hearing from the other presenters and for any questions you may have.
Well, thank you so much, Dave. If you have questions for Dave, please begin to type them into the Ask a Question box on your console, and we will get to them later in the broadcast. Now we will welcome David Rothstein, Senior Principal with Cities for Financial Empowerment Fund, and his collaborator, Mike Sanchez Jr., Retail Sales and Service Manager with River City Federal Credit Union. David will start off the presentation and then hand it over to Mike when he's concluded. If you have questions for them, again, please type them into the Ask a Question box. David?
Thank you so much, and I really wanted to say that I appreciate the NCUA hosting this event and their support of the Bank On movement. And it's always good to present with colleagues like Dave Szyminski and others who have been doing financial access work for so many years. So thanks for having me here today. What I'd like to talk to you about is our Bank On work set. And so as many of you know, the Bank On movement started more than 10 years ago with a focus on bringing people into checking accounts. The unbanked rate, according to the FDIC, was well into the double digits, and it was a massive concern, as it should be, for both communities and financial institutions about households who had no relationships with financial institutions. So I am thrilled to update you on the progress that we've made and what we seek to do, and we're hopeful that more and more credit unions find Bank On as a useful program, a useful tool for all of our shared mission in this work set. One thing I wanted to touch on is why we feel like banking access matters so much, just to kind of set the stage. And I mean, there are two really broad reasons why banking access matters. The first is that it's expensive to be unbanked and expensive to be underbanked, meaning underbanked meaning you have an account, but you're still using services like check cashing, buying money orders, that kind of thing. We know that people who are unbanked spend upwards of 10% of their take-home pay on financial services themselves. So it's extremely expensive, and it's expensive for the people who can least afford it. Additionally, the second main reason why being unbanked is a problem is it really hinders other financial empowerment goals. I know that most credit unions on this call have a continuum of services that they offer their shareholders, which is great. And those include things like small business services, credit cards, auto loans. As a credit union member, I use all of those different pieces, right? The problem is for people who don't have a checking account and are unbanked, they're far, far less likely to utilize those services and achieve financial empowerment outcomes. So in a study that we did of our own financial empowerment work set, this includes pieces like not being able to improve their credit score, not being able to pay down debt, their savings goals are not met. All of those things are connected to having a bank account. It's really that building block that gets them underway. So what we've done is we have put together a national and it funnels down locally program called Bank On. What Bank On does is it works with financial institutions, banks, credit unions of all shapes and sizes to create safe and affordable checking accounts. These accounts are then put into play with mass marketing both from us nationally and locally from coalitions, which we have 90 of around the country and growing, who help get people into these accounts. Additionally, we work with the Federal Reserve Bank and others to monitor the data and figure out exactly how these accounts are being utilized, where these accounts can improve, and what other programs and services people that open these accounts can get into. And then finally, we continue to partner with groups like the NCUA, with groups like the CFPB and FDIC to find places where people are getting paid or reimbursed, and opening a bank account would make those programs even stronger. We call it the super multivitamin effect, because you're taking an already strong program like a child tax credit payment, and you're making it go even further and making it even stronger by connecting it to a bank account. So I mentioned the first piece of this equation being the certified accounts. So the certified accounts refers to the fact that what we've created with an advisory group that consisted of credit unions, banks, trade associations, consumer groups, coalitions themselves, and bank regulators. We put these standards together with the thought in mind that we needed a comprehensive, strong, ambitious, but achievable floor for what an account should look like to be considered safe, affordable, and fully functional. So the Bank On accounts refer to features that the account actually has. So for safety, these accounts have no overdraft fees, no insufficient fund fees, and no inactivity or dormancy or closure fees. Most of these accounts are checklist checking, which obviously helps you as the financial institution have an account that doesn't have the ability to overdraft or incur insufficient fund charges. safe for the consumer, safe for the financial institution. As others have mentioned before me, there's an affordability factor. The number one reason why people are unbanked is the cost to start and or maintain a bank account, which is what they refer to. So we have an affordability piece to this. Accounts do not have to be free, but many are. But we require that the monthly fee, monthly maintenance fee is $5 or less, with a minimum opening deposit of $25 or less. There is a carve-out, an exception for credit unions that the minimum opening deposit of $25 is counted as separate from any kind of membership or fees to join the credit union itself. So if you guys have a $5 share fee to become a member of XYZ credit union, you can still have the $25 minimum opening deposit. Those two things can be counted separate. Additionally, these accounts are fully functional. Long gone are the days of the second chance accounts that you couldn't pay bills with, or you got penalized if you went into a branch rather than an ATM. These accounts are required to have some kind of bill pay mechanism that you can make deposits and withdrawals and transfer money. So these are fully functional bank accounts, even if they are checklist checking accounts, some of them. Additionally, our work set continues to grow with the help of our participating financial institutions. Currently, we have 155 financial institutions across the country that offer a Bank On certified account. That's, in terms of bank branches themselves, that's about 45% of all U.S. bank branches offering a Bank On certified account. We also know that with only 10 financial institutions reporting out of the 60 that were eligible to report that year to a voluntary database managed by the Federal Reserve Bank of St. Louis, that there were nearly 2 million Bank On certified accounts opened in 2019 alone. So again, these are, and I'll talk about this in just a second, these are very popular accounts. We also know that we're doing a pretty good job of opening accounts where it matters most. So we know that close to 60% of certified accounts were opened by customers in neighborhoods with 50% or more minority population. And the Bank Policy Institute did a really good job of analyzing the data to help us calculate that. I mentioned that these are really popular accounts. Let's dive into that for a quick second. We know that 85% of accounts that were opened in 2019 were completely new to the financial institution where they were opened, meaning that the new customers did not have a checking account there, they didn't have a credit card, any kind of a bank account. They were completely new to the financial institution. So this account was drawing them in. The safety and soundness and excitement of this account was the reason that they started that banking relationship. We also know that people are using these accounts just like other accounts, and in fact, sometimes more frequently. People are swiping these cards like crazy. The debit transactions on these accounts are more in terms of per use than other accounts that our financial institutions have. We've heard that a lot. And then additionally, we know that people who are in a mostly cash system are in fact using these accounts. Only 1/3 of accounts were solely using deposits by direct deposit. So again, a very good sign that we're really banking the unbanked population. The other piece that I mentioned is, and this is really important, is that it's not just about designing the account and getting it certified. We think that our role is to also broker relationships where people can open accounts in a seamless way to have a strong pipeline for you guys as financial institutions. So some examples of where people are opening accounts and getting reoccurring deposits include universal basic income, also known as Mayor's Guaranteed Income programs around the country. These are obviously monthly payments that are direct deposited in somebody's account based on things like income, number of children, and of course where they live. We're also working with pre-existing programs like the Free Tax or VITA program. And one of our certified credit unions actually in Jackson, Mississippi, worked to ensure that people were getting their tax refund direct deposited into a bank account rather than waiting weeks for a paper check. And then additionally, we're looking at programs like workforce development and training programs, where people are filling out a lot of paperwork around their occupations and about to start a job. And this way, they have a bank account the minute they start their employment, so that their first check is a direct deposit rather than even a paper check, which again is really exciting. There are other programs that are obviously important. In fact, we worked in Maryland with the Department of Labor and our Bank On Coalition in Maryland to help transition people from the prepaid debit card that the state had selected for unemployment compensation to opening a Bank On account and getting unemployment compensation directly deposited into a bank account. We've also been working with the IRS and FDIC to ensure that people get the child tax credit payments that have been going out and will continue for a few more months, if not longer, directly into a bank account rather than a paper check. So again, these are taking existing programs that are already strong and connecting them to bank accounts. The other piece that I should mention too that's exciting is that this also creates a pipeline for financial institutions. So while we think it's great that somebody would come into a credit union and open an account like this, which happens all the time, what we really want to happen is for you guys to be opening 10, 20 accounts per week rather than one by one people coming in from just a purely retail strategy. We've also been working with our Bank On coalitions, which I'll talk a little more about in just a minute, to ensure that the most challenged groups who are likely to be underbanked, even if there's not a payment stream, are counseled on how to open one of these Bank On accounts. That includes groups like youth that are aging out of foster care, people that are in domestic violence situations, and people coming back from the criminal justice system. So I'm going to stop there. I am thrilled to, again, join you, and I always am happy to work with credit unions on a one-on-one basis. If you have an account that you think meets our standards or would like to learn more about the standards, please email me with my email listed here. We are also able to pre-certify accounts, which means even if your account is not active yet and you're in a planning stage, but you want the seal, the Bank On seal and certificate to be used, we can do that as well. So even if you have an account that's not going to be launched until first quarter of 2022, we can look at the account, make sure it meets the standards, and certify your credit union. So with that, I'm going to turn over the slides and share to one of our certified financial institutions in River City Federal Credit Union, who has done a great job of creating an account, getting it into the community, and in fact, starting a Bank On coalition in the San Antonio market. So Mike Sanchez, who's the retail sales and service manager for River City Federal Credit Union, is going to talk about their account and how it works and what they did to get it certified. So thank you again for your time. And Mike, thanks for being a certified Bank On account holder.
Hi, thanks, David. Hello, everyone. Yes, my name is Mike Sanchez. I am the retail sales and service manager here at River City Federal Credit Union in San Antonio, Texas. And I'll just start off by just going over a little bit about our credit union. So our credit union has been serving Bexar County since 1936. We're currently at 131 million in assets with just under 13,000 members. So we've been in the area for quite some time. We're kind of what we call a little hidden gem in our community. We have a lot of major credit unions in San Antonio. But I wanted to go over our mission and our vision because that does come into play, you know, when we start looking at our products and kind of redesigning them, and especially working with someone like Bank On to help get one of our products out into the community. But our mission is to provide affordable, sensible financial products and services to everyone regardless of citizenship status. And our vision will create an environment where all members are treated with respect, where their financial goals become ours, and where our households and businesses have access to affordable, value-based financial products and services. So we all take that to heart here, again, not only when we're considering a new product, but also as we do our business development initiatives out in our community. Next, I just wanted to also kind of highlight that we are Juntos Avanzamos Credit Union. We have been since 2012. We are also a CDFI credit union since 2016. And now, as of 2019, we have a Bank-On certified Fresh Start checking product that first started off kind of as a fresh start checking, and now it's our low-cost checking for our Fresh Start members in our community. So River City strives to reach the unbanked and underserved communities of San Antonio. A large majority of these communities only speak, read, or write in Spanish. All marketing materials now come in English and Spanish, including our website, online banking, mobile app platforms. All financial wellness and membership seminars are also provided in Spanish. So as we considered this product and we wanted to take it out into the community, we knew we had to make some changes, and we couldn't just do one particular seminar or one particular marketing initiative. So everything has to be in English and Spanish in our community for our members to fully understand what they're going to be taking advantage of. And lastly, I'll talk about our product. So our product is called Fresh Start Checking. It gives individuals a chance to bounce back from past negative checking account history or activity. This negative history would normally keep them from having a traditional bank account and access to basic services, forcing them to utilize check cashing services and predatory business for help. If someone doesn't have a checking and is using checking cashing services, paying for bill payment, money transfers, and paying for prepaid debit cards can be over $75 a month in fees. So we were pleased to turn this account into a low-fee checking account that could offer the services of a normal checking account. We do have a $25 opening deposit, $5 monthly service fee. There is no overdraft courtesy privilege, nor are there fees for that. No minimum balance requirements. Free online mobile banking, including mobile deposit and also bill pay. They are issued a debit card, and the debit card is with PIN-only access. And they are counseled and have access to free financial wellness programs at account opening. And once the negative items in history has been cleared from check systems, or they've had 12 months of satisfactory activity with us, which would be no attempted overdrafts, no return deposits, and it's been active for a full 12-month period, we will graduate them to our Simply Free Checking, which again is a no monthly fee product, and then it allows them more usage of their debit card, more for credit side. So that's the program that we have in place. We see more usage out of it now. We're marketing it more, obviously, to the community, support of Bank-On. But as we continue to get out in the community, this product is just going to continue to grow for us. This was the first product in our suite of, I guess you could say, Fresh Start loan and share products, because now we have our loan products that are low fees and low rate as we try to keep our members away from predatory lenders.
Excellent.
And that is all I have today.
Well, thank you, Mike and David. Excellent presentation, really detailed information, and we're hoping very valuable to those of you listening to the broadcast. Please remember that if you have questions, please type them into the Ask a Question box. We want to take advantage of all the experts on the broadcast with us today, so please type them in if you have questions. Now we will welcome Ann Solomon, Vice President of Strategic Initiatives with Inclusive, and her collaborator, Marcy Francisco, Chief Experience Officer with Premier America Credit Union. Ann will start us off with the presentation and then hand it over to Marcy. If you have any questions for them, please be sure to type it into the Ask a Question box. Ann, over to you.
Thank you, Ken. And thank you to the NCUA for hosting today's webinar. It's a really important issue, and we're really grateful to be part of today's session alongside the other speakers here. I wanted to just share a bit of background for those of you that don't know Inclusive about who we are. Inclusive is a national CDFI intermediary, and we're also a network of over 400 credit unions that serve low-income and underserved communities across the U.S. And a key part of our vision and our guiding principles is that financial inclusion is a fundamental right for everyone in the country. And safe and affordable accounts are really the foundation of that financial inclusion. They are the pathway for people who have been excluded to join the financial system with a trusted partner. And by offering safe and accessible accounts, your credit union becomes a key avenue for low-income people, for people of color, and other excluded communities to really be welcome and embraced into that system. And it's also the pathway into all of your credit union's products and services. And I also just wanted to call on the time, as the country has really increased its focus in the past year on issues of racial and economic justice, we really see account access as a key part of the way that credit unions can continue to step up our collective work to make our financial system more equitable and more just. So it's a really timely session, and we're excited to be part of it. Wanted to spend a minute here on just talking about who are the unbanked and underbanked. As some of the data was shared a little bit earlier, but a little over 7 million households in the U.S. are unbanked today. And not surprisingly, those households are not evenly distributed. So the unbanked rates for Black households at 14% is 4 times that of white households, just 3% of whom are unbanked today. And we see similar inequity in underbanked rates with Black and Hispanic households being underbanked at 3 times the rate of white households, with almost a third of all Black households relying on alternative service providers like check cashers and payday lenders to conduct their financial lives. And we see similar trend when we look at income levels, that low and moderate income households are unbanked at much higher rates than higher income households. And I want to talk a little bit about why folks are unbanked or underbanked. And I think this was called out a little bit earlier, but this is from survey data from the FDIC on the reasons that unbanked people report for being unbanked. It is not because they don't know about accounts or banks. It's because they feel that they can't afford accounts or have faced barriers to opening. So we see that the top reason that folks report that they don't have an account by far is that they don't believe they have enough money for a minimum balance requirement. The second most reported reason is that people don't trust banks. Fortunately, as credit unions, we don't face that same issue. We benefit from, by and large, a lot more trust in communities than banks, and are able to build strong community partnerships to address this. We also see issues of personal identification, credit, or former account problems as a key reason that people have not been able to open accounts, and a sense that the account fees are too high. And finally, there are a set of folks that believe that avoiding the bank gives them more privacy. They want to be outside of the financial mainstream. But that is a small percentage of the overall folks who are unbanked and underbanked. Most are not unbanked by choice. They are unbanked because they don't feel they can afford accounts, or they face actual barriers to opening them. And a bank-on account or an account that offers second chance features really helps address the top 4 issues that we see here, and can really broaden access for people that have been outside of the mainstream. So when we consider that most people who don't have accounts are low-income people and people of color, really encourage credit unions to look at account features with an equity lens. Who is prevented from opening accounts as a result of the way they're structured, and who is paying the most to maintain their account at your credit union. Screens like check systems, credit score thresholds, and documentation requirements can often prevent the people who most need your credit union services from joining your credit union. And policies that broaden access, such as alternative forms of identification, including ITIN accounts, second chance accounts, and bank-on accounts, can really open the door to people within your communities to establish relationships over the long term. I've included here a couple of resources. You just heard about Bank On from David. Also wanted to include resources about Juntos Avanzamos, which is a nationally recognized certification for credit unions that are serving Hispanic and immigrant communities that Inclusive manages. This includes ITIN accounts and ITIN lending for Hispanic and immigrant consumers. I also included here resources about CDFI certification, which is a really critical tool and an avenue for funding for credit unions that are looking to expand your community development efforts and want to be recognized for that and be able to access more resources to support those activities. And finally, I just wanted to end on some, probably hard to see here, but some research that Inclusive has conducted that has shown that broadening access and community development work is not only a good thing to do, but also good business for credit unions. We've done analysis of the financial performance of CDFI certified credit unions compared to credit unions that are not CDFI certified, and have found that across asset classes, the CDFI credit unions outperform non-certified credit unions. That includes return on average assets, average yield, as well as a number of other factors. So we see that safe and affordable accounts are a real fundamental building block of the CDFI credit union business model, and that credit unions have been able to turn those relationships into long-term successful and profitable relationships with those members. So I want to end there, and I've included my contact information. Happy to speak with anyone and a follow-up about any of these programs or follow-up questions that we don't get to today. And I want to hand it over to Marcy Francisco, the Chief Experience Officer at Premier America Credit Union, who is an Inclusive Network member and a Juntos Avanzamos designated credit union as well. Marcy?
Thank you, Anne, and thank you again to the NCUA and to everyone for allowing us to join this session today and to share a little bit of our story. We're really excited and grateful that we have the opportunity to partner with such wonderful entities in the credit union movement. So today I wanted to provide a brief overview of kind of the strategy that we undertook about 3 years ago, and it really is a 5-year strategy, and it's designed to help us lean into our community. So a little bit about who we are. So we're headquartered in lovely Chatsworth, California, in the San Fernando Valley in the heart of Los Angeles. We serve today Los Angeles County, Ventura County, and expanded in 2021 to be able to serve members that live, work, and worship in Harris County in Texas. A little bit about our background. You know, we have been serving our member communities and serving the market since 1957, so almost 64 years old. We started as a Lytton, and now we are serving our general community, a full-service credit union with a wonderful range of solutions. We also have an in-house insurance agency, wealth management, and we have a nonprofit foundation, the Premier America Foundation, that's dedicated to fighting hunger and promoting financial wellness in our local communities and in our youth market. And a little bit about who we are in terms of our core purpose. We believe that we exist to make it easier to meet today's needs and reach tomorrow's dreams. And there's a lot within that statement that I think is really deep for our team members and for our member audience. But a few years ago, we took a look at our market. And so Premier America has a wonderful history, has been very successful, financially healthy. But we wanted to understand where the market was going. And when we looked at the average age of credit union members, the average age of our Premier America members, we recognized that we skewed a little bit older in terms of the member demographic that we served. And we also recognized that we weren't accurately reflecting perhaps the age and the demographics of the markets that we served. So when we think about Los Angeles County, Ventura County, and Harris County, and what Ann just touched on in terms of a commitment to serving the Hispanic community, serving the immigrant community. Los Angeles County is about 48%, approaching 50% of the residents there are Hispanic origin. 34% of folks that live in Los Angeles County are immigrants. Kind of similar metrics we saw in Ventura County and in Harris County. So we recognized that our markets were changing, and we needed to ensure that we reimagined ourselves to be able to serve the markets. And we were also facing that same challenge that a lot of credit unions face today with how do we ensure that our current members give the gift of credit union membership to future generations. So we recognized that we needed to make a shift. And it was a really important shift to ensure that we were serving our communities. We reached out to our partners. We reached out to the team at Inclusive to really help us chart a course for the future. And we also worked closely with our board of directors. We started with understanding who we were, right? Previous Litton credit unions serving the communities, a tremendous amount of opportunity in front of us. But what did we really stand for? And we worked closely with our board of directors. We have a fantastic visionary board of directors that has helped us shape this strategy. And we recognize that we really stand for equality, individuality, recognizing potential in our members and in our community, delivering value so it's worth your time when you partner with us, helping people make a plan towards the future, being very committed, and deeply believing in diversity, equity, and inclusion. And so understanding who we were, and we did a lot of work in terms of unpacking this, studies, market research, we looked at what did we want to accomplish. If we wanted to really drive strong community growth and reflect our wonderful diverse communities, what did we need to do to get there? We knew that we needed to invest in technology and making it easy, which is that key part of our purpose, making it easier to meet today's needs. Time is valuable. So for these members and potential members in our community, they're entrepreneurs, they're working 2 jobs, they've got a lot of time pressure, right? So we wanted to eliminate some of the friction. We knew that we needed to look at our core systems, our online banking, mobile banking, and reduce any barriers to being able to access your accounts. We needed to reflect our community in the images and the language that we use, but also in the way that we serve our community and who's actually serving our members, starting with our board of directors, our leadership team, and our team members in all of our branches. We wanted to increase the value that we're providing to our members. So when time is money for our members, when that's such a precious, limited resource, if they come into our branches, if they visit us online, we want to be able to provide more than they're asking for. So more advice, more tips, more ways to interact with us. We are very committed to being a credit union that offers member-friendly pricing, low to no fees. So we're, again, touching back on that theme that so many of us touched on. Many people, consider the fees as a primary barrier when they're looking at how do I have access to a safe and affordable transaction account. And so we have been very deliberate in how we reduce or eliminate fees on our accounts. And we wanted to have very inclusive lending solutions so we can serve all of the audience that's out in the marketplace. And finally, we want to enhance the financial wellness and the well-being of our youth and the members in our community. So we knew we needed to accomplish these kind of 6 areas, and we were very deliberate and intentional in laying this out over a 5-year mission. So the first year, in 2019, it really was about laying the foundation from a technology perspective and working with our partners on the strategy. So we worked with Inclusive, we worked with other consultants to understand our current member demographics and where we needed to go. We did do a core conversion so we could be much more nimble in how we connect technology systems and platforms to our network for our members. And we completed a retail study so we understood where our members lived, what's the demographics of where we should place our branches, so we were very effective in opening up access to those markets. And our board was excellent, and they committed along with us to diversity in the boardroom and diversity in the leadership. We were also very proud to become Juntos Avanzamos designated credit union at the tail end of 2019. 2020 has been focused on market enablement, so shifting our focus to ensuring that we're driving core deposits for our members, so great savings rates for our members, returning that, and offering value in all of our deposit products. We reimagined our brand. So we took the Premier America brand, you can see the logo over there, in 2019, and we wanted to open it up, have it be fresher, more approachable, and we expanded our branch network. So we looked at those branches that had an opportunity to be placed more effectively, and we started to chart a path to do that. In addition, we recharted the foundation, Premier America Foundation, and the board to promote, sorry, I got tangled there, to focus on financial wellness. And in 2021, where we are today, we've launched our new spending account. So very excited to be able to share more details about that. We've been working on product development on the deposit side of the house and also beginning that on the lending side of the house. And we also launched a new online banking, mobile banking platform, and Zelle. So it's easier for members to be able to move money. And in looking to the next 2 years, we're going to be leaning into diversity, equity, and inclusion, continuing our work on our deposit and our product suite, inclusive lending and ITIN lending, alternative forms of ID, and really focusing on financial wellness. And then in 2023, we want to ensure that we've made an impact as we measure the success we're generating in terms of helping our member community. So we're very excited about our brand new Smart Spending account. This just launched, so it's only been in the market for a few weeks. And we worked closely with the team at CFE, with David and his team, to ensure that as we were designing this product, it would meet Bank On standards and it can be certified. So it becomes that trifecta of having that Juntos Avanzamos designation, having that Bank On designation for our accounts, and building towards CDFI certification. So this account is designed to make sure that as members join Premier America, they have a head start on building savings and access to safe and affordable transaction accounts. In addition, we tied in the theme of doing social good, because so many members that we hope to bring into Premier America really want to give back to their local communities. This is a very low-cost, no-fee account. So it has a $0 opening deposit. There are no monthly service fees, no minimum balance requirements, no overdraft fees, no NSF fees, no deposit fees, no out-of-network ATM fees. And we also have some free OOPS protection. So we do recognize that every once in a while something might happen. And so if a member ties in a direct deposit to this account, they've got a little bit of that layer of protection for them just in case. Free debit cards, free access to online banking, telephone banking. There are no deposit fees, bill pay, fraud protection alerts. So some of those key low balance alerts, text alerts are available for members as well. We are also just around the corner from launching early access to direct deposit. So that is coming in November for this account. We're in final stages of testing and awareness. Finally, we're tying it into that bonus Head Start savings. So we do look at this as the first account with Premier America. You come in and you have a Smart Spending account and a Smart Savings account. And if you tie in that direct deposit, we'll deposit $100 to help members get a jump start on that savings. So we're very excited about this account. In the early results that we're taking a look at, we did model it based on some of the data that's provided by CFE on those Bank On accounts. Highly encourage you to take a look at it. This account is skewing younger for us. So the members that are joining Premier America and then opening a Smart Spending account are primarily opening online versus our standard primary checking accounts that are primarily opened in branch. but these members tend to be about 25% younger than the members that are opening a primary checking. This is digitally oriented. They're also doing about 50% more transactions. So it's a much more active account in terms of our early results than our primary checking out of the gate. And in only the 4 weeks that this has been out, 26% of the checking accounts or the spending accounts that our members are opening are smart spending accounts. So it's being picked up very quickly by our members, and we're excited that this is certified as a bank on account. So great early results. We will continue to closely measure and monitor and adjust. So it is a value for our members and for our community. But for us, as I said, it's a path, it is a journey. What comes next for us? We are leaning into financial wellness. We want to ensure that when we look to next year and the year beyond, we've got great information and education available to be able to help our community. And so we're focused on how we can launch a brand new platform next year and then measure the improvement in terms of credit scores, folks that are going through our platform. That will be a discrete focus of the organization. And we are working to pursue CDFI certification. So again, thanks to the wonderful partners that are available in the industry, they're helping us chart that course and helping us set the way. We work closely with the Boys and Girls Clubs on capital impact projects, community impact, and giving back. And then we're going to be focused again on continuing to evolve our deposit and our lending products, looking at our underwriting standards, looking at ITIN lending, and then how do we innovate? Because ultimately, as we serve our member communities, they want us to serve them quickly, easily, and really stay very, very competitive with what they might see from fintechs and others in the space. So it has been a path. It is a journey. We're seeing some early success, but we're very fortunate and grateful that we've got great partners and a wonderful board that has helped us along the path. So thank you again, and I'm happy to connect with anyone that has any questions about the journey that we're on and perhaps provide help and support as you start your journey.
Wow.
And with that,
sorry about that, Marcy. Thank you so much for that presentation. What great information you shared, and Ann as well. If you have questions for Marcy and Ann, please type them into the Ask a Question box. Looks like we have a few flowing in now, which is great. Please continue to ask them. The panel is eager to answer your questions. But before we get to the question and answer section of our broadcast, which will come up in just a moment, first we will hear from Natasha McAdoo for a quick reminder to credit unions. Natasha?
Thank you, Ken. And happy International Credit Union Day, everyone. As financial literacy and outreach specialist for the NCUA, I identify current and potential issues relating to consumer protection areas to help strengthen credit unions' financial literacy and outreach initiatives. Being able to witness the unique and inspiring deeds credit unions are doing to uphold their mission is inspiring and deserves acknowledgement. To capture what credit unions are doing in these areas, the NCUA relies on credit unions to update their credit union profile. This slide is a snapshot of the financial literacy education product offering section. Credit unions are urged to become familiar with the description of each category so that the profile form collects accurate information about what credit unions are doing to strengthen the financial lives of their members and communities. This is not an area credit unions want to underestimate their reach and impact on, which in turn would cause underreporting on their profile in the credit union industry efforts. For clarification and further descriptions of the product offerings, click on the question mark box on the top right corner of the page when filling out the profile. As an example, the financial counseling description includes credit union assistance with budgeting and debt management for their members. Thank you again, and kudos for all you do today and every day.
Well, thank you, Natasha. Very important information for credit unions. We'll go ahead and transition to the question and answer segment of our presentation today. And you see our great panel there, and again, their bios are on the console. My first question is to our credit union guests. We know we've seen news reports recently, and we know your credit unions are already moving down this road. Lots of credit unions making the decision or contemplating the decision to reduce overdraft fees or eliminate them. And that involves a lot of strategic planning, and Marcy walked us through a lot of great the pathways, basically, her credit union took, and Mike, you did as well in terms of the rollout. Can you dig a little deeper, though, and share with credit unions on the call some tips and strategies as you went through your strategic planning process? What did it take to, consider these changes internally to roll out a low-fee, no-overdraft transactional account? Perhaps explore, the impact to the balance sheet, the impact to other areas of your operation. You can imagine what credit unions are thinking across the country right now who may want to go down this pathway, and this webinar is really designed to help them on that pathway. So anything, Marcy or Mike, you can share would be helpful. Let me start with Marcy, perhaps.
Sure, thank you very much. I think, when we think about, tips and strategy, we definitely started with our community. So everything wraps around the member. What do our members need? And, who are we really trying to serve? And, particularly in Los Angeles County, again, the median income is lower than it is in other counties. So you're talking about a lot of folks that, maybe struggling, maybe living paycheck to paycheck, right? And if we really want to drive growth, we needed to start with focusing on our members, right? And what do they need? So we did a lot of research in regards to what's going to be valuable and attractive for our members. We were starting with a deep commitment as well to being a credit union that has that member-friendly pricing, that low to no cost, low to no fees. We don't believe in things that might be perceived as punitive fees for our members. And plus, that's a market that may be at risk. And so we understood that, yes, there will be an impact to the balance sheet. But if we are effectively serving our members and we're providing high-value accounts and solutions to them, we've got the opportunity to make that up in terms of interchange, the engagement that our members are making with us. And so if we have more active accounts, it gives us the opportunity to be able to overcome that. Ultimately, there'll be times where a member does, make a mistake. A member does have an oops, and they need a little bit of protection. And we understand that there's a little bit of a loss in that fee income there. And we are comfortable and confident that the value that we provide for our members is going to help us kind of overcome that. So we are very committed to looking at all of our fees. I mean, we reduced a significant number of fees back in 2018, 2019, even before the pandemic. And we will continue to do that. It is just a key portion of our strategy because it meets our members' needs. I hope that helps. Mike, what are your thoughts?
So very similar. We kind of went out, and as we've had the Fresh Start Checking for a while, and as we continue to kind of go out to the community, our mission changed. We got new leadership, and we were kind of going down a new path. And when we were starting to hear, why someone didn't have a checking account and why they didn't want to use our Fresh Start Checking, it was always, fees was always, top of that discussion. So, working with Bank On and kind of really talking it through, and this isn't our primary checking account that we offer, so this is designed to help someone get back on their feet. So there's some restrictions there. So now, this game has changed a little bit where we now have to go back and revisit our other accounts to see, what we can do, and that's something that we have to plan to do as we're seeing credit unions coming out just recently, too, announcing more no-fee accounts. So one other thing is, too, when we take it to our board, your board has to support, these initiatives, and it makes it so much easier when they're on the same page as the credit union leadership and staff. When we hear from our members and we share the stories that we hear from our members and what they're needing, it's it's such a need in our community here in San Antonio. They're scared of fees. They've been with predatory lenders for so long. They don't even feel that they're paying fees, but when you break it down to them, I mean, they're pretty shocked. And to offer them a low-fee checking account to get them back into the real world of banking, you know, they're pretty excited about that. And then also turning it into a low-fee and loan opportunity for them to not only build their credit, I mean, it's just a double win. So, I mean, it's just been a game changer for us, making those minor changes that we had on that particular account.
Thank you, Mike and Marcy. Excellent feedback for credit unions across the country. I want to build on that question a little bit and bring in Inclusive and Cities for Financial Empowerment Fund. You know, a lot of credit unions across the country are all different sizes, but many are smaller and have limited staff and resources when they're thinking about these programs. Can you offer any additional tips and build on what Marcy and Mike already laid out for us? Ann, you want to start with you?
Sure. Thanks, Ken. I think I would say that this is a case in which we do see movement across the credit union, across credit union spectrum by asset size. And so obviously today, there's a pretty wide range between River City and Premier America in terms of size. And within our own membership, we have credit unions that are part of our network that range from, very small $1 million in asset faith-based institutions, up to multi-billion-dollar institutions that all, share a commitment to serving the underserved and adapting their products and services to keep expanding that mission. And so, I think for our smaller institutions, we have a number of small credit unions that are part of Bank On coalitions, and I don't think being a small institution is an impediment at all. And in many ways, you can often see small credit unions adapting much more quickly, because they're kind of smaller operations and can often be much more agile in terms of if they need to make kind of small adjustments in account features, they're able to move quickly to do so. And for many of those credit unions, the partnerships that a Bank On account or Second Chance account enables can really help them grow and build their membership because, for many of our members, partnerships with nonprofit organizations, social service organizations, or, city programs or county programs are really part of the special sauce for them and how people are hearing about their credit unions and coming in the door through those kinds of trusted partners. And, when the city or nonprofits know that you have an account that their clients can get into, that their beneficiaries can get into, that's going to be safe for them, that's not going to run the risk of folks overdrafting or people who are in vulnerable communities potentially getting into more, creating more issues by overdrawing an account, they're going to refer those clients to you because they know that they'll be protected in those accounts. So it's a great opportunity for credit unions to get into those kind of partnerships and not be seen as they're just a bank or someone trying to market to us. They're actual partners that have a product that's really good for the people that we're serving.
Thank you, Ann.
Sure.
David, did you want to chime in as well?
On this one, I think Ann did a great job, sort of talking about it. I don't have a ton to add for this particular question, so I'll save it for maybe some of the more focused Bank On certification or program integration questions.
Sure. There is a question for you here, David, so I'll go ahead and ask you. It's about the 1.9 million accounts that you indicated were opened in 2019. Is there an indication of the closure rate of those accounts? This questioner is suggesting that there's often a high closure rate.
Yeah, and I think that with a lot of the previous accounts that were, second chance accounts or that were opened when there weren't payment streams connected with them, I believe that the closure rate is pretty consistent with your quote-unquote mainstream traditional share or checking accounts. So I think that what we heard reported is under 30% on a year-to-year basis. However, there's a couple of things to note on that. The first is when we get that number, what it doesn't do a good job of separating and including is that some people, as you might expect, move from this account to a more traditional mainstream checking account with paper checks. So that would get put into the closure rate, but obviously isn't a true, that's a good closure, not necessarily a bad closure. The person's leaving the credit union or bank kind of thing. So take that with a grain of salt. But again, anecdotally, we continue to hear from financial institutions that the closure rate of these accounts is either better or on par with what they'd expect from other checking accounts. And again, I think that's because these are fully functional accounts. So people don't, sure, they could switch if they want paper checks or something else, but they don't need to. They can continue to use these accounts because they're so fully functional.
Thank you. Thank you, David. We'll go over to the Bureau, the CFPB. Dave, what are some of the efforts underway at the Bureau in terms of research? You shared a lot of research with us about consumer behavior and sort of the impact on the consumer by overdraft fees. Can you share a little bit more about what's in the works and also the consumer education resources that you highlighted? Can credit unions, how should credit unions use that? Can they put it on their website, send it out in the newsletters? Can you share a little bit more about what's going on at the Bureau?
Sure. So we continue to monitor the market, constantly and regularly. If you go onto our website right now, you'll find several papers that we published, but they have some age to them. They're 3 or 4 or 5 years old. When we had something to report in terms of patterns and practices that that were observable and that had some meaning to them. And I would suspect in the future that we will publish again some additional research as we have findings that we're able to accumulate. So I can't predict when that will be, but as we continue to monitor the market, we'll publish findings as we have them. As far as the consumer education content, all of our content is available. It's public. It's free. There are a number of pieces that you can download or accessible electronically right on our website. You can also order our content for free if you, for example, wanted hard copies of some of the documents, which in some cases many people do. And then the third thing I would add is that there are some customized booklets around saving and bill pay and debt and checking and things like that, which you can actually co-brand. So there's instructions on our website. So say, for example, a credit union wanted to co-brand and put their brand on a particular product. There's instruction on our website for how to do it, and we welcome that. So all our content is free. It's accessible both in hard copy and electronically, and it's also accessible in most cases in Spanish as well as English.
Thank you, Dave. We got a specific question for you, Marcy, about your, can you explain the savings bonus attached to the Bank On account? If you could just go over that again, we've got some interest in that.
Absolutely. Thank you for the question. So part of the product design on this is to help not only support affordable access for our members to their transaction accounts, but really help them build an emergency savings, kind of boost and build savings. And so what we did on that is that if a member opens a smart spending account and they have a direct deposit tied to it, we set the threshold pretty low right now, so it's a direct deposit of $200 in the month, then we'll deposit $100 into a Head Start. We're calling it a Head Start savings bonus. and will put it into their Premier America Smart Savings account. So we wanted to have an easy threshold for members to be able to achieve that. We are measuring and monitoring to determine is that the right level on that. So want to understand how many members are actually qualifying for that, and if members are not qualifying at that threshold, what makes sense for the organization and for the members. But yeah, so low threshold right now, just set up a direct deposit of $200 total in the month, and you'll get a $100 Head Start savings bonus into your Smart Savings account. Great question. Thank you very much.
Thank you. Another account question. I direct this at both credit unions or any member of the panel who might know an answer to this. It's not very specific, so I'll just ask it and see if it triggers a response on the panel. The questioner is asking if you can explain or provide an example of documentation requirements that can change to open accounts. Maybe ID requirements this questioner might be asking about. Any thoughts on the panel?
Yeah. I think this is Anne. That may be in response to my presentation. Yeah, I think I was referring in terms of documentation requirements in terms of ID requirements. And so accepting alternative forms of ID that would broaden access to their accounts. So I would say that that can include examples such as enabling folks who may not have a Social Security number but have an individual taxpayer identification number, an ITIN number, to open accounts with your credit union, as well as providing alternative forms of ID. So that could include things such as, like here in New York City, there's a New York City ID provided by the city that most of our member credit unions here accept as in a form of identification. We also have a number of credit unions in our Juntos Avanzamos program that will also accept identification from immigrants' home country, such as like a matricula consular from Mexico, if folks do not have state or federal issued ID from here in the U.S. So those are some examples of ways that credit unions can broaden their identification policies in a way that will enable more kind of immigrants and others to open accounts at your credit union. I don't know if both Premier and River City or Juntos Avanzamos credit unions, I don't know if there's anything you would add to that.
No, I mean, as far as documentation, paperwork-wise, there was nothing that really changed. I mean, we do accept ITIN for our new members. We do accept, obviously, alternative identification, from a migrant, like from Mexico, things like that. But that's just part of our normal membership process, really.
Yeah, and you covered it well, Anne and Mike. We have the same focus in terms of just kind of broadening access.
Thank you.
Yeah, one other area that I would say I think the ID stuff is critical, and I'm really glad that all three have mentioned it. One other piece that I would add that's a best practice is working, and the NCUA can perhaps be helpful here in guidance, but working on permanent address issues. So one of the things, especially post-pandemic, well, we're still in the pandemic, pardon me, sort of economic recovery post-pandemic is that a lot of people don't have a permanent address that they can use, whether it's a shelter or a very temporary 2 to 3 month housing situation, whatever it might be. One of the things that we're hearing is the need for flexibility around using a grandparent address, a shelter's administrative address, or like a HUD permanent address, that kind of thing. I'm sure that's very critical, especially as the the rental eviction protections have now waned off. So I would just add that one thing to think about.
Thank you, David. If anyone has additional questions, please type them in now. We're nearing the end of our broadcast. I'll go ahead and ask this question, and then we'll see if there are any other come in. We'll have probably time for about one more question after this one. So in order to help credit unions go down this pathway that you all have already, credit unions on this broadcast have already sort of demonstrated, can you give the credit unions listening in an idea of where to start? So what's the first step that they should start implementing at their credit union? You, Marcy, and both Mike had mentioned understanding membership, right, and understanding the needs and wants of your members, of the credit union members. Maybe that's a great place to start, is surveying members, holding membership drives, or holding meetings to discuss, virtual meetings to discuss what products and services the membership is interested. But can each of you just go down, based off of your organization's expertise, where should a credit union start if they want to go down this pathway? David, can we start with you from CFE?
Sure. Yeah, so happy to. So a few things. The first is, if you already have an account that doesn't have overdraft or insufficient fund fees as an option on a particular account, you're half the way there for bank on certification. So taking stock of that's the hardest issue for most financial institutions. If you have that, you're well on your way. Number two, look at similar financial institutions in size and scope to see what accounts they're offering to help you kind of think about what you might want to do. And step three, we can also help with this, but your core processor. We work with all of the core processors, especially the 5 largest in the country, and they all now have somewhat templates. So they have an existing infrastructure to help you with your account if it's already not designed. And then the other steps would be to contact us. I love talking with financial institutions to hear what you're doing, what you want to do, and how we can be helpful. And then, of course, also connect you to any local bank-on coalitions of the 90 that we have that are state, county, or city-led coalitions. So those are the pieces that I would say to look at. And again, happy to help.
Excellent. Anne? Do you have
Sure.
anything to add?
Yeah, I'll just briefly say, I think, as we saw with Marcy and Mike's comments, that, I think this does really need to start with leadership and start with your boards, because, on the one hand, we're talking about account features, but on the other, I think we really are talking about an orientation of your credit union and toward a commitment to community development and broadening access. And so, it's not only how to structure the account, but also, how to support new members as they're coming in and potentially a different population than your credit union has previously served. And so I think, seeing both of these credit unions' journeys and thinking that through in a really strategic way is important, because you do want to, broaden access and reach different parts of your market maybe that you haven't reached, whether it's younger consumers, immigrant consumers, other communities that haven't been as well served. But you also want to think, how are you going to support them once they come through the door? You not only want them in that account, but you also want to figure out, do they need access to financial counseling services? Are they going to be able to also access great loans at your credit union, and what does that need to look like? So really thinking through that member journey as well. And of course, I'll also second that inclusive. We are happy to be a resource with all of these journeys as well. So feel free to reach out.
Thank you, Anne. Thank you, Anne. Marcy, anything to add?
Yeah, thank you. So obviously we've touched on understanding your marketplace. You have to know where you're starting from so you understand where you want to go. And I second Anne's comment. It really does start with leadership. This was a meaningful shift for our organization. And so in every meeting with our teams, we talk about how we're going to build a culture within the organization that values everyone within the organization and all of our communities. That our board was tremendously supportive, and they put a stake in the ground in terms of wanting to lean into diversity at the board, diversity in leadership, and really going down this new chapter in terms of our credit union's future. It is absolutely a journey. We are still working on building the culture every day, talking about the mission, the vision, and the why of making this change. So really excited about it, but you don't have to do it alone. There are great partners in the movement that can provide insight and guidance like they did for us.
Excellent. Thank you, Marcy. Mike, any final thoughts before we conclude?
Everybody seems to be kind of on the same line. It's about knowing your market, and once you have identified that there are needs out there, you obviously need to come back to your board and to your leadership and get the support. And thankfully, we've had the support from day one. And I'm going to say, without the information that we got from Inclusive, it would have taken us probably a longer time to make some moves and make some decisions. But we went through a full process with Inclusive, and they provided us so much data and resources, not only to help us make decisions on our products and services, but also they helped us put a branch in a spot that there was one needed. So we opened in 2019 with the help of them finding us a good spot here in San Antonio, where there were so many underserved members, and that is now one of our busiest branches, just in a few short years. So talk to Inclusive. They have a lot of information. They can help you out and answer any questions. But that's kind of where we really relied on them to provide us that detail in order to help make the decisions we needed.
Excellent. Thank you, Mike, and thank you to the entire panel. This was a wonderful broadcast with a lot of great detailed information. So we thank you all for your time today and for bringing your expertise and sharing it with credit unions across the country. And to all the credit unions listening in and other stakeholders, we hope this information was helpful to getting on the pathway here to account features that are conducive to serving the underserved and consumers in general. So this concludes our broadcast. This webinar will be available in approximately 3 weeks' time on ncua.gov. The webinar will be closed captioned and available on our site. So thank you.